So company earnings come out for any company. Let's take JP Morgan, and I was asked, what do you make of the earnings? Actually, what the real question is, what do I think the market will think about the earnings? Because what I think is irrelevant. I don't move market prices, the market does. So on the whole, I don't really care, because I'm holding for 12 months. Once I've purchased based on all my criteria, then it's really driven by whether or not it drops 25% from the peak since I purchased it. I don't look at every single piece of news and whatnot. But let's say I did and I took this. Let's, for fun, ask AI, what does it think these mean? Okay, so I'm going to plug that in. I'm going to move myself out of the way slightly, and I'm going to ask it, what does this mean for JP Morgan's likely price moves over the, let's say next 12 months? Now, you know what AI is going to say. Assume you are a incredible stock analyst, stock picker, have read every piece of academic literature on investing, and I don't know, are a hedge fund manager who worked as a partner at Goldman Sachs, okay, as their top investor. That should do it. Right. Now you might say, there's a lot of holes in this, you might say, well, it's just, how do you know AI's read any of that, understands any of it, and you've not given it enough information, etc., etc., etc. So let's see, background, blah, it's thinking, it's buying time at this stage. And let's have a look what it says. Factors that could affect global uncertainties, etc., etc. Yeah, no kidding, just tell me whether I should buy it or sell it. Credit card did all of this. It's probably just repeating some of the things which were out there. It's having more of a think. Give me the bottom line, AI. Stop stalling for time. Of course, the longer people stay on my TikTok page, where it is likely to experience volatility in its stock price over the coming year, influenced by both external economic factors. The bank's robust fundamental and strategic position suggests resilience, but investors should remain cautious given the unpredictable economic landscape. AI has got splinters up its bum because it's sitting on the fence so much. Monitoring upcoming quarterly earnings and statements from bank executives will provide further insights, blah. You can see why I try not to rely on narratives. And imagine doing this with 10,000 companies, or even just the 20 in your portfolio with each piece of news. That's why my general rule is hold for 12 months unless it drops 25% from the peak since you bought it. That strategy has worked incredibly well for having Meta since January of last year. Why did we extend beyond 12 months in that case? It was the golden eggs that it kept laying. Same with Nvidia as well. Others, if they look like, well, 12 months finished, done. Or as I say, if they drop 25% from the peak since January 2023, neither Meta or Nvidia has. I'd expect out of a portfolio of 20, maybe 2 or 3 will in the space of a normal year do that from their highs since they were purchased, which across 20 stocks, you can do the maths, barely impacts your overall portfolio performance anyway. Thank you. Hopefully that was both a bit of fun and some insight and a tiny bit of entertainment as well. You're welcome.